All right, now we have more movers on your radar, and Sam Vadas, Schwab Network. Sam Vadas is with me here on set, and we'll start by talking about Affirm today.
A big move to the upside in double digits this morning as we get up and running for trade. This obviously being a big player in that buy now, pay later space. So the stock actually, funnily enough, initially took a little bit of a leg lower off the back of the figures that we got in the afternoon session, or I should say post-market yesterday, but then popped. So let me run you through the numbers. Better than expected, beating the street's estimates on EPS of 20 cents versus 11 cents, and then revenues of 876 million versus 837 million. So that would mark a 33% growth story there as far as sales. Now, gross merchandise volume rose 43% to $10.4 billion from $7.2 billion a year ago. Just seeing a note out from JP Morgan this morning saying that they're fairly encouraged by that because of the fact that that growth exceeded 40% for the first time since the pandemic. So I'll get into what the analysts are thinking about this in just a little second, but guidance also looking strong for Affirm. Q1 revenue will be between 855 million and 885 million, while gross volume, merchandise volume will be 10.1 billion to 10.4 billion. So the company has been talking up their consistent execution here. As I said, shares looking good this morning, up in double digits, and had been quite high, certainly heading into earnings, up 30% or so year to date, very much outperforming the major indices. But as we know as well, there is a lot of competition in this space. We know that this company obviously having some partnerships with Amazon and Shopify, but Walmart has gone with a competitor that is Klarna. So it very much looks like that this is not the only player in town when it comes to this payment space. But I suppose what it does tell us as well, Nicole, is that consumers are spending, and we've seen that. The financial companies, those in the business of payments, have been very much talking about the fact that they're not worried about the consumer right now. It's just interesting, you know, as to where they're spending, what we're learning from the companies throughout this earnings season that tells a little bit of a different story.
And strong uptake of the 0% APR loans is fine. You know, basically, it seems like free money. I mean, it's buy now, pay later, and it really brings new customers in, they said, to Affirm, people who have not used Affirm. And the question is whether or not people are going to be, you know, too overloaded with too many things that they need to buy now, pay later. But for right now, right, I mean, there's even with a 0% financing, it still sort of can add up. In the meantime, the Klarna story with Walmart, as you noted, but the big picture here is it really looks good. People have been flocking to it.
Yeah, and look, we've had a couple of price target boosts off the back of this earnings report as well, from the likes of Bank of America, for instance, now looking at $94 from 90, keeping a buy rating on the shares. They fairly optimistic on what we've heard from this report card, and continues to see spending strength holding up and execution remains strong. So the firm is not surprised to see the shares trading higher, as we've seen off the back of this. And JP Morgan, as I mentioned, also looking at $94 in line with the folks over at Bank of America from 91, keeping overweight rating on the shares as well. As I mentioned, fairly encouraged by that gross merchandise exceeding 40% for the first time since the pandemic. And it's also volume growth reaching the highest level on record. So they say that the guidance beat expectation on most metrics, which is what they seem to be fairly encouraged by as well, Nicole.
All right, let's talk about Autodesk. So Autodesk is higher after its earnings as well. We talked about a lot of losers earlier, like Marvell and Dell, which are down more than 10%, 16%. But you're seeing some winners here.
Yeah, this is another winner, up in double digits today, 11% higher as we get up and running for trade off the back of better than expected results. So we saw adjusted EPS of $2.62 versus $2.45, as we can see here, on revenues of $1.76 billion versus the street's expectations of $1.73 billion. So that revenue would mark a 17% increase there, also raising full-year guidance and adjusted earnings forecasts, expecting revenue growth between 9 and 10% versus the previous estimates of 8 to 9%. So Off the back of that, it's earned itself a long list of price target boosts that I've been combing through today. Analysts across the board raising their expectation. Barclays, Mizuho, Oppenheimer, Piper Sandler, Stifel and Wells Fargo. I'll just get through a couple of them because, as I said, it is quite a long list here, but mostly optimistic on the beat and the guidance. As straightforward as the folks over at Barclays have said, they've got a price target now of $385. We're trading at $319 at this stage. You've also got the folks over at Mizuho looking at $375 now, an outperform rating. Also very much encouraged by the accelerating architecture, engineering, construction, operations growth, easing friction from the new transaction model. And then you've got Oppenheimer, which is in line with the price target over at Mizuho as well. I mean, they're very encouraged also by the results, optimistic about management continuing to embed pandemic level conservatism into the low end of their billings range, but also the fact that they've positively surprised investors with long-term margin expectations too. So it does look like the analyst community fairly optimistic about this one, as we've seen with these price target boosts from a number of desks across the board.
All right, and yesterday you gave us a preview of Alibaba, and today we're seeing Alibaba up about 8.5%, talking about even how it plans to replace NVIDIA chips. Really a nice move here.
Yeah, an interesting timing of this Wall Street Journal report coming out suggesting that Alibaba is creating a new AI chip to fill the NVIDIA void. Let me park that there just for a second and get you across these earnings because it was a bit of a mixed quarter. Revenue was up 2%, but that missed expectations actually, putting it down to the disposed businesses. So revenue would have been actually around 10%. It repurchased 56 million ordinary shares, equivalent of 7 million ADSs. So it has been engaged in a fairly aggressive stock repurchasing program as well, but better than expected bottom line growth thanks to very much strength and renewed focus on its core businesses. Let's talk about the e-commerce. Revenue came in 10% higher. International e-commerce up 19%. Interesting because there has been some concerns around some of the investments, particularly in Taobao, around the instant commerce. And what that means is that they've been investing heavily in just trying to get these goods to consumers even sooner. This is something that JD has typically been good at, but they're looking at trying to get some of these Taobao goods to consumers within an hour. That is certainly instant commerce. So EBITDA took a bit of a hit, 21% lower. But e-commerce is important because it makes up for around 50% of revenues. This is really a core business for Alibaba, as we know. We know that it's been engaged in these price wars with regards to e-commerce, obviously with the likes of Pinduoduo, JD. It's also been engaged in a price war on the streets with the delivery as well, with the likes of Meituan too. But let me talk about the cloud, because this is really the bright spot here. Revenue from cloud was strong, up 26%. I believe it was about 18% last quarter. So you're continuing to see strong double digits here. Investors are very much focused now on what they're doing around AI, particularly with regards to this new report about the chips. Given that this is the fourth biggest cloud provider and APAC's biggest, so that's important to keep in context, but it's a balancing act. Investing very much in the e-commerce while very much relying and being offset by the strength in the cloud. But yes, Wall Street Journal now reporting that it's developed a new chip that is more versatile than older chips, and Alibaba is obviously a customer of NVIDIA, but now it's trying to fill the gap and the void, given that it's obviously facing a lot of pressures, Jensen Huang and his company, from not just the American side, but the Chinese side as well, saying, hey, we want our guys to use the domestic stuff.
And then, so good news there. We talked about AI, the quick commerce wins that we've been seeing for Alibaba win here. And last but not least, we take a look at Ulta Beauty, and Ulta is lower. Let's talk about that.
Yeah, so this is the underperformer across the four companies that I've spoken about this morning, trailing by 4.5% or so in trade this morning, even though it topped these expectations here, actually. Earnings per share, $5.78, and revenues of $2.79 billion versus $2.6 billion expected, raised its forecast as well. Comparable sales, that that is an important metric that obviously investors focus on, growing 6.7% year on year, more than double the analysts' expectations. So looking ahead, does expect those comparable sales to grow between 2.5% to 3.5%, up from their projections of 1.5%. So that was also good news. Expecting net sales to be between 12 billion and 12.1 billion, up from the previous guidance as well, and expects earnings per share of 23.85 to 24.30, up from the previous range as well. So it's up to the guidance there, and also adding new brands and products that really helped drive the purchases in the quarter, including Korean beauty. We know that that obviously has become very popular. Beauty is hot right now, Nicole, and it's interesting because that's despite the pullback that we've seen on discretionary items across the board. Whether this is to do with people going back to the office more, I don't know, but this does come amid economic uncertainty. People, however, are still spending on these beauty products and their makeup. That means it's a very competitive landscape for companies like Ulta. Tariffs have also been a big challenge for these companies as well. However, Ulta not as exposed. About 1% of its stuff is imported. That's according to the company. But it's also been acquisitive too. It announced back in July that it snapped up a British beauty retailer that allows it to push into those international markets as well. So yeah, it's a very fascinating story at a time when we are seeing consumers thinking about the hip pocket, being a little bit more conservative about their spending, but still going out and buying beauty products.
All right. Thank you, Sam Vadas. Great to see you.